Hello and welcome to today's webinar on exempt and non-exempt employees presented by our sponsor, Heffernan. So we're happy you can join us. My name is Michelle Wilcox and I will be your moderator today and be monitoring questions you may have during the session. Before we open up the session, let's review a couple of key items. All of the webinar materials we discussed can be found at the URL currently showing on your screen. I will be sharing this URL and a follow-up email, so don't feel like you need to write it down right now. If you have trouble with your internet connection during the webinar, we recommend leaving the presentation and logging back in. If you have audio difficulties or a telephone line goes dead during the call, hang up and call back again to the same number. If all lines go dead, watch the on-screen chat box for an alternative call-in number. Feel free to ask questions or to provide feedback by using the chat box during the webinar. If you're using tablet, you may need to tap on the screen for the options bar to appear. Then you can select the appropriate option. We may not respond immediately, but we will work your questions or feedback into the presentation. If we can't get to your question or comment during the session, we will be online afterwards to respond or may follow up in an email if we run completely out of time. You may also email us at moderator@aspenrmg.com for up to 48 hours after the webinar. This will be a 1-hour presentation. Questions and comments are very much encouraged throughout, and the presenters will be answering questions at the end. And lastly, we have a number of webinars upcoming covering a variety of topics, including those listed in the Heffernan website. In addition, we offer mandatory preventing sexual harassment training in English 3 times a year. With that, let's begin today's webinar, Exempt and Non-Exempt Employees. Today's interactive session will be facilitated by CJ Westrick. CJ Westrick, SPHR, has been in human resources management for over 25 years and has worked in companies with 25 to 1,750 employees nationwide. CJ received her SPHR, which stands for Senior Professional in Human Resources, national certification in 2002. She has a bachelor's degree in business management. She started HR Jungle in 2006 and targets companies who want senior level HR expertise on a part-time basis. HR Jungle provides business owners and management teams workable solutions and hands-on assistance with employees and legal compliance through outsourced HR services. Go ahead, CJ.
Hi, welcome to the webinar. Thank you so much for joining us today. And today we're going to be looking at the definitions between the exempt and non-exempt, some of the penalties that come up, and the exemptions themselves. I always like to find stuff in the news that is relevant to the conversation. And with this particular topic, it's fairly easy because a lot of companies are hit by having misclassified employees typically as exempt when they should have been non-exempt. So one of the examples we have is Deja Vu Consulting, where exotic dancers had been classified as independent contractors rather than employees, and so the company got hit. And this was a company, there's a lot of exotic dancers out there apparently, and 64 nightclubs. So that one was a misclassification in a slightly different direction. And but then we have Zenefits, if some of you have heard of that, because it is an HR type of company, and they ended up having to pay $3.4 million in unpaid overtime to account execs and sales reps. That usually is going to come because of the fact that these people weren't properly classified in some fashion. And I would guess with Zenefits, because they weren't truly outside sales reps. And T-Mobile, same thing. We've got $19 million for off-the-clock work, unpaid overtime, missed meal and rest breaks. The missed meal and rest breaks is a California thing. But there's always something popping up when it comes to exemptions. And part of that is I think it's one of the most confusing laws we have out there, only because it's not well defined, because and therefore makes it easy to be subjective instead of objective. Whereas there's other things where it's a little bit more black and white, not much sometimes, but a little bit more. And with the exemptions, it's been really hard, I think, in my entire HR career, it's been one of the harder things to convince business owners of what is the correct thing to do. The exemptions we're going to cover today are the executive, administrative, professional, outside sales, commissioned inside sales, and computer professional. A computer professional one, I believe, is only in California, thanks to the .com bust years ago. But let's start first with our first polling question. Michelle?
Okay, the first question is, how much weight does the title carry in determining if the employee is exempt or non-exempt? First answer is 25%. I'm sorry, only one question.
Yes, the options for answers are 25%, 50%, 100%, or none.
Or none. Okay, it looks like majority of people, 69% said none, and the next was, there was tied, 13% said 25% and 100%, and 4% said 50%.
All right. Basically, if you talk to the feds, they're going to say the title means nothing. They could be called CEO, and it doesn't mean that they are actually exempt, because they're always going to look at two things: the salary test and the duties test. Now, the salary test in most states is not a biggie because it's not a high number to have to hit. In California, this is a number that keeps growing all the time, because the salary test is going to always be a calculation. It's always going to be 2 times your state minimum wage times 2,080, which is considered full-time employment. So anyone who's exempt must be making that every year, no matter how few hours they might actually work for you. The duties test is the one that becomes the big issue for the most part, because it isn't as black and white. It is looking at a lot of different things that we'll go through some of that as we continue here. But most of the time, employees will be considered automatically non-exempt unless you can prove otherwise. And it's also, if you're doing an audit in your company, it is wise to perhaps at least bring your attorney into the idea of it, in order to have the client attorney privilege, because that way, if you do find that where a lot of your employees are misclassified, it's protected information while you're trying to clean it up. And but to take a look at what you've got going on out there, because I think there's a lot of positions out there that are misclassified as exempt when they should still be non-exempt. So when we look at non-exempt is basically hourly. Everyone has to, everyone starts there. So, in most states, it's going to be that they now, if they're non-exempt, because the exempt is they are exempt from these things listed here. They are exempt, if they don't have overtime. They're exempt if they don't have to worry about minimum wage because they get a higher salary, or that the company's not controlling them. But for non-exempts, they are paid overtime. And in California, it's for anything over 8 hours in a day or 40 hours in a week. In most other states, it's anything over 40 hours in a week. They must meet minimum wage rules. So you need to make sure what your state minimum wage is, and that you're paying at least that. And I know there's been lawsuits over time that some companies, I think it was Domino's years ago, that had a lawsuit because their delivery people at that time, this was before all the delivery services came into play, but their delivery people had to pay for their own gas and stuff, and they only got a certain amount toward a delivery. And so someone was tracking this and proved that between his cost to go make the delivery and what he received, he was not earning minimum wage. So you need to make sure if there's anything that the employee must pay for themselves, that they're still earning minimum wage after that. Because most states are going to say it's like it shouldn't cost the employee anything to work for you. So also, as a non-exempt, you've got a lot more control over that employee. The company can control their hours of work. what exactly the work is and when it is. That's your kind of gopher person a lot of times, to where you're telling them and they've got somebody who's letting them know what they're doing each day, or they've got something that's their general job that they do every day, but it's been controlled by the company. They can't just veer off and go do something else. And so you've got a lot more control over the non-exempts, and to look at that and see, because that's something that a lot of people don't realize. They lose some of that control when someone becomes exempt. And when we look at what the definition of an exempt is, they are exempt from overtime pay, any meal and rest breaks. Their hours can't be counted or comped in most states. In California, for sure, you can't have such a thing as comp time. So, I worked on the weekend, so I'm going to take Monday off. That's not really the way it works. And most of the time, I think I worked with a CEO that had the simplest explanation for this. It's like he was really good at storytelling. So he's like, okay, I have this box of responsibilities that I'm handing you. And in exchange, I'm also, giving you this pile of money. So you need to earn that money, you need to do whatever it takes to get this box emptied. And it's, or to taken care of and stuff like that. It is an exchange. I'm going to pay you this amount, and whatever it takes, you get the job done. And so I see a lot of companies, ideally, you're not giving them the responsibilities that take, 80 hours a week to do, but you should have, a level of responsibility that the average is 40 hours. But this also means then when you have paid time off, like the sick leave we have these days and in most states, and even the vacation or PTO time you're using, to judge, when, what are the rules for an exempt person taking that time off? Because I've got some clients will say, well, as long as it's less than 4 hours, we're not going to worry about it because we know they're getting the job done. We know they put in other, extra hours on other days, things like that. Then I've got other clients who are very rigid about it. It's like, no, I expect them to be there 8 hours every day and sometimes overtime. And just that's it. So, the big thing is that they need whatever they're doing throughout the week, it needs to meet the duties test of one of the exemptions. You can't just say, oh, they manage 5 people and therefore they're automatically exempt. It doesn't work that way. You need to pay attention to what their responsibilities are. So as I mentioned, the minimum salary is kind of the easy one because that's just a hard number. Every year it's going to change. Well, if you're only subject to the federal minimum, it's a really low number to hit. So that's not going to be your big concern there. But with California, I've had to have that conversation with several, companies, to where it's like right now, because our minimum wage is going up $1 a year right now. And so it looks at the state minimum wage, which means that salary is going up about $4,500 every year. So at this point, I'm saying if you're going to now turn somebody exempt, that position better be worth at least like $56,000 to the company. Because otherwise, at some point in time, you're going to say, oh, we can't keep popping it up like this, so we're going to have to go back to non-exempt. And at that point, it gets really tricky and very costly. So you want to take it very seriously when that decision is made. One of the things that's in, I think, every single exemption that's out there is this customarily and regularly exercises discretion and independent judgment. Now, most people don't get what that means because it is written in a way that everybody looks at and goes, huh. And so you're really looking for things that have an impact on the company. If you look at a CEO or you look at a vice president in the company, you know that they're exercising discretion and independent judgment all the time. Where it gets a little messier is when you're trying to make a supervisory or a manager position exempt, because maybe they're working inside a box of where their decision making falls and they're not really having independent judgment. And so it gets a little tricky there. And the employee needs to have a certain level of authority and power to make independent choices and decisions. And, they're not immediately, supervised by somebody, and they're supposed to be handling stuff of significance that's important to the company. And this does vary a little bit with each exemption, but it overall gives a good base to whether or not the person should be exempt. So when we look at penalties, depends on the state you're in, but I'll work from the bottom up here, because the employee gets to decide what wasn't paid for. Because the one thing that happens all the time with exempt employees is most companies are not tracking their time. I have a couple of companies that do, because they're doing job costing. They're breaking out people's time and partially billing it out to clients, things like that. So they do track time, but most companies don't bother. That's one of the big pluses of being exempt. You no longer have to go and do that punch in every day. And then it gets a little bit trickier, because then it goes down to what is the state. In California, we have paid rest breaks. We have very, very specific meal breaks. And so there's penalty pay there if they are not getting it. But overall, every state's got some version of overtime. So let's say that person who had to work 60 hours a week in order to get their job done now comes up and says, I don't think I should be exempt. I don't have that level of responsibility or even authority to make decisions. And I have had people come to me with that comment before. So that's why it's very important that you don't misclassify from the beginning, because now, and I've had to do this before, in California, they can go back 4 years. EDD, our Employment Development Department that does this kind of stuff for the state, can go back 4 years. And I've had to lay out 4 years of calendars in front of an employee and say, all right, on every day that you believe you missed a meal break or you had overtime that you weren't paid for, mark it on the calendar. Because if that position doesn't change as when you've got it exempt and now you decided, oh, okay, maybe the exempt level salary is too high for the position now. You don't want to keep paying that. Or maybe the employee has raised a red flag, or even EDDs come in and said, no, I don't think these are going to be, exempt positions. So this is then what you have to look at, is that now, because you didn't have records, the state will believe whatever the employee has told them that is owed them. It's like I worked at least 2 hours overtime every single week in this role. And so if you ever have to change from exempt to not exempt, you really do need to pull away some responsibilities and show that the position itself is not the same anymore. Because otherwise, they're going to compare it apples to apples and say, oh, there's things I didn't get as an exempt employee that I should have received. So then you've got the federal and state fines that will come, because if there's things that should have been paid for in the payroll, like the overtime, that means, the state and the feds always look at what they didn't get from their piece of it. So that means they didn't get that little bit of extra payroll tax that the overtime would have brought them, or whatever else was happening in there. And then you've got the attorney fees, because this usually is going to require some kind of an agreement when you're correcting it to say, all right, basically it's like, all right, we're going to pay you this amount of money and you're going to sign something that says we don't owe you anymore. We're clear right as of this moment. And so going forward, we're going to do it this way. And, so it can be costly in a lot of directions if you misclassify. So we start off with the executive exemption, and it really is very similar to what it sounds like. You're looking kind of at your C-level employees. They're running a department or the company itself. They usually are managing at least 2 full-time employees, but it's more the fact that they've got, they're the ones with the power to hire and to fire and to change the status of an employee. And they're spending at least 50% of their time on exempt and related duties. So it's controlling, it's planning directory. You might not have thought of this before, but the higher the level of person, the less they, we'll call it, physically do, because they're more thinking. They're trying to decide what direction the department should take. They're planning the work. They're directing the work. They're not doing the work. And, so that's kind of what the executive exemption is all about. It really is that very high level group that you've got. Then we move to what's probably one of the most common ones is the administrative exemption. This is usually what you're going to find managers, even director level, perhaps be under this particular category. And so it's office work directly related to the management of policies of, general business operations or even, your customers. It again requires that discretion and independent judgment. Staff employees who are functional rather than department heads can sometimes qualify under this. So it really depends again on how much they're running something as opposed to being the hands-on person. And it's like that, we could talk about this forever because there's so many nuances to it. But let's move to our next polling question, Michelle.
Okay, the next polling question, is your executive assistant or administrative assistant exempt? Yes, no, or only the executive assistant? And while we're getting the answers, somebody has a question, again, with respect to the salary test. How does that interact with part-time employees? If someone is hired at 80% of a full-time employee for 32 hours a week as a standard, does that mean the salary test is also prorated? If
No.
not, then that would imply the part-time folks are almost never exempt.
And yeah, it's like, even if you had, because I've had people tell me, oh, well, we've just agreed that we'll pay them $1,000 a month because they only really have to work about a week or something. That salary test has no proration. It doesn't matter if that person only works 1 hour a month for you. They must meet the full salary test. It's always presumed, it's always calculated at a full-time thing, even if the person is part-time. So your 80% level, you could use that on like the benefits, everything else except the salary. The salary test must still be met.
Okay. It looks like most of our people have voted, and 61% said no. 19% said only the executive assistant, and the other 19% said yes.
Okay. As a rule, these days, both the executive assistant and administrative assistant are most likely going to be non-exempt. We'll call it in the old days, there was actually a role of executive assistant that truly was. I mean, it was something we would consider more of a manager, or a VP level today. They truly took over the CEO's responsibilities when the CEO was unavailable. That was what the original executive assistant looked like. They had decision-making capabilities. They were the right hand or left hand, whichever side you want, to the CEO. And so they were the one whispering in the CEO's ear all the time about this or that needs to be done or something like that. But that position has gotten diluted over the years to where now it's more just a difference in title of who they're reporting to. Executive assistant now perhaps reports to the C-level people, but they still don't necessarily have that same level of authority and responsibility. They've just got people they're working for that have more responsibilities and authority. So it's a fine line, but rarely, these days does that. Most of the things I'm seeing, it's just like the chances of the person being exempt are pretty low these days when it's in any type of administrative position. And in that sense, because if they were exempt, what they need to be doing, they are truly advising management on like policy changes or this or that. They are planning and strategizing things. They are negotiating deals on their own. They are representing the company in those deals, and they have the ability to sign when signing a contract or materials or anything. They might be promoting sales. They're researching business development stuff, analyzing the data that comes in, and even making policy. So when you look at that and you compare that to what a typical administrative assistant or even these days an executive assistant does, you can see where that position now falls short of that compared to what they used to do. And that's where it's like a big danger zone, because it is a common one. I have actually been part of hiring administrative assistants who will not take the job unless, and it's so funny because they don't know the terminology even. It's just that exempt, that salary has this persona of some sort that makes them better than others. Oh, I make a salary, therefore I'm better than you that get an hourly wage. And but getting a salary, and I will say there is a difference between being salaried and being exempt. Salaried is a payroll term. Hourly and salary is payroll. They're going to be put in there and that's how you're paying them. Okay, so maybe you've got an admin assistant who actually is non-exempt, but you're going to pay them a salary because that's the way they wanted it. It means a little more work for you because what happens is you put them at salary, so that means they're getting the same amount of money each week or each pay period, but now you have to reconcile that salary to their hours. They do still have to keep a time card going. And now you have to make sure that that salary covered them in case they worked overtime or something. And it's really hard to do a salaried if you're paying semi-monthly, twice a month, because that's 86.67 hours, which will never look the same when you compare it to hours, because the actual hours worked end up being 80 or 88. So you're always going to have to fix something in there. So keep that in mind. Exempt means that they've qualified for one of the federal exemptions. And that's why they're exempt. That's what gives you the ability to make them salaried as an exempt employee. So that's different, because then if they work over or under their 40 hours, you don't care, or at least it doesn't matter to the money. Whereas a non-exempt person who's getting a salary, it will matter. I know it completely confused everybody with that, but keep that in mind. Salaried and hourly is not the same, technically not the same as exempt and non-exempt. It's just what most people are most familiar with calling it. So examples of exempt are going to be a financial consultant who's working for the company. They come in and they work on a regular basis with your company, or financial analyst will say something like that. The accounting manager maybe. I've seen some where the accounting manager maybe only has one clerk working for them, and so it's not really a high enough level because they're way too hands-on. HR manager, same thing. Hands-on versus not hands-on. You have to pay attention to that. And how much are they actually making decisions? I've seen, as an HR consultant, I have gone into a lot of companies where I meet up with what they're calling an HR manager who has no HR background at all. They don't know what they're doing, which is why they're calling me in there. It's just the person that they've hired to handle the day-to-day HR stuff. So they're more the old paper pusher. So, and typically not exempt are positions called supervisors, because they are often a working manager of sorts, we'll call it. They're not spending enough time thinking and planning and telling others what to do. They're just overseeing what others are doing. Same with an office manager. They're not managing, they're managing, kind of some things. They're, in charge of the office supplies and kitchen supplies and a lot of roles in there, but they're not typically hands off. And then we go back to the executive and administrative assistant that I've already discussed. So that's where it's a lot of, and I won't say you don't see it everywhere, because a lot of companies have misclassified employees. And I've even gone in and done, reclassifications with some clients, and so a couple of the positions they've kind of said, well, okay, we understand that this should be a non-exempt, but the people have been in this role for a long time, so we're really just going to leave it as is and take the risk that at some point it's going to come back to bite us. And it's like, okay, all I can do is advise. So keep that in mind, that it really is a different mindset moving people into exempt positions. Let's go to our next polling question.
Okay, the next question is, a manager with 2 employees usually exempt? Yes, no, or not sure? And somebody just asked what you were meaning when you said not hands off.
Because as you'll see as we go through these exemptions, most of the time the person has to be doing exempt level duties 51% of the time to qualify. So what you find with and that's what I mean by hands off, they are not side by side with their employees doing similar work 75% of the time, because that makes them just somebody with some supervisory responsibilities, but not qualified to be exempt.
Okay, so it looks like about 70% have voted so far. So 43% said yes, 32% said no, and 25% said not sure.
The not sure are probably the safest at the moment because, oops, went backwards. Um, because and I'll go into that, because this kind of goes into this whole working managers thing. But I will say that a manager, I mean, it's very typical for people to think, oh, they have they have a couple of people reporting to them, so therefore they are qualified to be exempt. And I will say, I don't know if any of you remember, gosh, when was it? Maybe 2016. Anyhow, a few years ago, the federal government wanted to raise the minimum exempt salary across the board to, I think it was like $47,776. It was a weird little number, but it was basically close to $48,000 a year for all states. Everything that would be the minimum salary you had to pay. And the reason that they wanted to do that was because they found way too many companies were misclassifying people who were making far less as exempt. And they said, for the level of responsibilities and authority we're talking about, it really is a position that you need to be paying a lot more for than the current like 23,000. And because if you're going to get somebody who's taken on all these responsibilities at 23,000, they really probably don't have that level of authority. And the second thing they threw in there was the fact that it's like, all right, and they actually, this went on over a year, the discussions about this. And what they had started with was saying not only they want that close to 48,000, but it needs to be more than two people, because if we're using two people, first off, they had to be full-time. So we're talking, you're managing every week 80 hours worth of non-exempt employees. But gosh, if you only have two and one goes on vacation, that week you are no longer exempt because you're not managing 80 hours worth of people. So that one kind of, that part of it got dropped off a little bit halfway through that discussion, and they focused more on the money, and it actually got passed. But that was on a week of Thanksgiving, and then within that same week, busy week for a holiday week, but the same week a judge came in and said, no, we're putting a hold on it for now, because it was a huge hit for southern states, because a lot of the southern states have a much lower minimum wage and much lower salaries overall. In California, it was very close to what we already had to pay, so it was like, no biggie. But in a lot of states that are doing like the federal minimum, it was a huge hit for them. And so there was fear for how it would affect the economy overall. But so that's kind of, if you think about it now, and I've always remembered that because that sticks in my mind when you're looking at that, because the feds are in the process of pushing again for a larger minimum salary. And so that's what you have to look at. If you've got somebody who's making less than 50,000 in an exempt level position, look closely at that position and decide, is it worth 50,000 or even 40,000? Because if it's not, then that absolutely should be non-exempt, because somewhere here you're going to be forced to make a decision and change things. Okay, so the working managers, which goes to the question that somebody asked while we were having the polling thing, working managers are usually going to be non-exempt. This was one of the big things with like the baristas and the supervisor at Starbucks. But bottom line is they manage a few employees, but they're spending at least 50% of the time doing the same work as the employees. The amount of responsibility they have isn't all-encompassing. They're not the ones doing everything, because and often they might be in an organization where somebody else is calling the shots, somebody else is making the policies, somebody else has to approve when they hire or fire somebody. So these are working managers. And so if you're trying to make them exempt, you really have to look at what their duties are. Truly, 51% of their time has to be spent on exempt level duties. So, they're relatively free from supervision. They really can make the decisions on wages and hiring and firing the people that work under them. They have a certain, you may have an upper level. Often, what I'll see that works well in that situation is that you already have a budget approved for the position. So it's not like they just get to pick a number out of the air. And, the VP for that department or the CEO, however, depending on how large your company is, will have final signing authority But a lot of times they didn't even have the opportunity to interview the person. They're just okaying this addition to the budget, that kind of thing. And so kind of take a look at your working managers and see what they're really doing most of their day or week, because it needs to hit that 51%, and that's usually not going to happen. I think in a lot of companies, they really have to be almost a director level to truly be more in that thinking role than the hands-on role. So another category is the professional exemption. And this one, it's very specific. I actually had somebody who had a gym and a fitness center kind of thing. And the person who was doing the training was someone who was an Olympic athlete, had their medals, had all kinds of training and stuff like this. And so they were but they were doing the training. They were providing the training, so they were hands-on. So they were trying to get them as exempt under this professional exemption. But in the end, I actually talked with an attorney to, check this out, because it's like, well, it didn't meet anything, but there's only 3 categories. What they call learned, which means that there's a degree very specific to that license, to where they had to be certified in order to have that role, or artistic. And again, it's the salary test. They have the normal salary test, which is, the state minimum or the federal minimum if you don't have a state minimum wage. So when we looked at the learned professionals, it is an advanced degree in a field of science or learning. And so these, I said et cetera at the end of this, but it's really focused almost entirely on law, medicine, theology, accounting, engineering, and the sciences. So it's because these are things that required an advanced degree in order to know what you're doing in those fields. And so it is a prolonged course of specialized intellectual instruction. It's not just something, oh, I've been doing it for 20 years, so I know what I'm doing. Nope, you have to have the degree behind it to really show that you know what you're doing. And it's someone who is analyzing and interpreting and deducing, and it's primarily intellectual in character. When you look at these things, these people are your thinkers out there in the companies. They're trying to do that. So we're not talking, this is where accounting manager on their own maybe doesn't meet this. So the licensed, again, very specific fields. The law, because you do have to get, your bar exam passed. You teachers have to be certified. Dental have to be, get certified. Optometry, architecture, engineering, accounting, and medicine. Now, the medical doesn't require a minimum salary. And it can include the degreed interns and residents, because they're on their way to getting, the final, pat on the head for being a doctor kind of a thing. But they have to have a license or certificate to do the work. And then the professional that doesn't qualify often are the pharmacists, because they're back there filling prescriptions. Nurses are often hands-on doing their work, even though they have a degree. They're not, thinking. They're not doing all the intellectual necessarily. There are some that might qualify that are more the physician's assistant type of thing. And then there's physicians that are paid hourly. And so they're not going to need the exemption because they're already paid hourly. So then the artistic, it's like, think museum quality. It really is. It's like, these are your actors that are getting work, your musicians that are not just playing at your local club, cartoonists, novelists, things that were they making a big, a good living at that work. And they're not just starting out, they are actually recognized, they're in a recognized field. And frankly, they're probably recognized at least by some quarter as, a professional in their field. All right, moving on to polling question number 4.
Okay, here we go. If a sales rep who spends most of his time doing viral demos of a product / making calls to prospects from a home office, exempt, yes or no? And then we had another question. Is it true that exempt salaried employees should not keep a timesheet?
There isn't a law that says that they cannot. The trick is how you're using the timesheet. If you're using it to make sure they work 40 hours a week, nope, you can't do that. The same way that you're not trying to pay comp time, that this is their job now. If they can get their job done in 38 hours a week, fine. Maybe they're just, I've seen people who one person in the role was putting in like 11 hours a day. And then that person finally left. And the new person that came in, I swear, it's like she had nothing left on her desk at the end of 8 hours. And so some people are just very efficient with their time. And so it's not based on time. But, and so if you're using the time card just to track their time, period, then I wouldn't suggest it. But if you're using it and there's an end reason behind it, like for job costing, something like that, then you have a reason for using the timesheet.
Okay.
How'd we come on the polling question?
We've got 66% said no, they are not exempt, and 34% said yes.
And I have had this discussion with more than one attorney. And the answer I keep getting back is that unfortunately, the laws have not kept up with technology. So the message is to get that outside sales exemption, they literally need to be out pounding the pavement. They have to be going out knocking on doors. They can take their laptop with them to do the demonstration in person, but it cannot be time spent in their home, in the office, trying to, either set up the calls or, set up the product itself if it needs some kind of assembly, making a delivery of the product. It can't be spent doing a demo from your home or office by the computer. It's face-to-face selling. And they have to be spending 51% of the time doing that face-to-face, not on the computer kind of selling. So there is no minimum salary here. So this is a position that I often see. It depends on the industry, but sometimes I'll see where it's a commission only, and that legally works. But you need to be able to prove that they're out there 51% of the time making those sales. When I worked inside, I was with pharmaceutical, medical device, stuff like that. And so we always had a nationwide sales force. And our sales manager, I mean, these people, it's like by the last week in July, they would have had to provide our sales VP their schedule for the following month, who exactly they plan to go visit, when they're doing it, because they'd already made all these appointments before the month. And, they were prepared. So there was no time wasted when they hit the road and they go out there, knocking on doors and stuff like that. But that's the big thing. And I am seeing a lot of this falling by the wayside and these people becoming non-exempt because of technology. And it's like, it's sad, but it's true. It's like the technology does not help us in this case. All right, our last polling question.
Do you have exempt commissioned inside sales reps? Yes or no? And we had another question. Can non-exempt employees work from home?
Yes, there's nothing, to me, a non-exempt working from home, you need to make sure you've got your processes in place. How do you know they're actually doing the work? Are they, do they have a home office? Because if they work from home, it doesn't matter if it's who it is, whether it's an exempt or non-exempt. If you have someone working from home, you have potential workers' comp issues. Do you know that they've got a legitimate office set up? Because they could file a workers' comp claim on you even when working from home. But there's nothing legally that says they can't work from home as long as they're paid hourly. I think the hard thing is for you to track, make sure that they're working your regular day. Because a lot of times when they work from home, they like, oh, I'll do some of this evening and stuff. And they could end up putting in overtime or creating some kind of a, wage and hour issue for you.
Okay. So it looks like, thank you for that. And it looks like 61% said no and 39% said yes on the commission inside sales rep.
Okay, and I believe this is more California than other states. I can't remember. I think but it's a federal thing. But bottom line is the general rule always is going to be that if it doesn't matter if they're commissioned or not, if they're an inside salesperson, they're the ones out there making the call, doing it all by computer, they are always going to be non-exempt. And the one exemption available to them is this commissioned inside sales, but it's hard to meet. First off, it's very limited industries. It's, you know, in California, we have these wage orders, so it's 4 and 7, but basically we're looking, the federal says that if they're not a retail establishment, it's not even possible. You know, we've had stuff in California like Cox, which is one of the cable companies here, got hit with a big lawsuit because they were doing this and, you know, they were trying to follow the rules, but it came down to, and this is why nobody likes to use it, and frankly, it's really hard. I think you're more likely to get penalized for using it than not, because you have to pay them a minimum of 1.5 times minimum wage. And they also, it's like it's looked at on a weekly basis, not a pay period basis. That's what happened with Cox. Cox was paying every other week, and it's like, okay, over that 2-week period, they met all of the rules. But the court said, well, no, it's a weekly. You know, overtime is looked at weekly. You know, the exemption and whether or not they earned enough commissions is looked at weekly. So there's so much administrative stuff having to go on in the background. I don't think you get much in the way of benefit, because the only thing they're exempt from is overtime. And, you know, and that's controllable. So I don't think this is a great plan. And they got so picky with it that I think they made it hard because they don't want people using it. It's like, you know, really comes down to it. It's like they have made it very difficult. And just by limiting, like federal says, you know, retail establishments, California has wage orders of 4 and 7, which is kind of, they're wider based on that, but even then it still needs to be retail. And it seems like I heard there was one other industry. So, you know, it's like, I think what they're really looking for here is all of those sales clerks out there that you see in the boutiques and in the stores. That's really who this was targeted for, that they can earn a commission and therefore, you know, maybe work a little bit longer hours and you wouldn't have to pay overtime for it. But like I said, I've seen it go bad as much as I've seen it work to a company's advantage. And, you know, so it's not one that I usually recommend anybody aim for unless you've got a really good way to justify it and a really good way of tracking everything to make sure that you're hitting the numbers every single time. And because of the commissions, let's say they didn't earn commissions one week, well, then that week you can't have them be exempt from overtime. And so that's why it gets so messy. It's, you know, it's different when you've got the other exemptions, because we'll call it not necessarily just a one-time test, but it is kind of like you test it periodically. I would say if you know your company's been changing on the other ones, go back and take a look at them. You know, once a year, go back and just, you know, verify, yeah, that's still exempt level work that they're doing. California, so I apologize to those of you who are not in California, but you can see a little bit of what we have to go through, has, because of the dot-com bust years ago up in Silicon Valley by San Francisco there, when all those companies that were just technology, they didn't actually have anything to sell. And then at some point, that bubble burst, literally, and all of these companies went down. And so because of that, they started having certain rules for the computer-related professions. And it's not a good test. I mean, right now, let's see, hold on a second. Yes, okay. So right now it's got a minimum salary test that's different from all the others. It doesn't require a degree, because a lot of people in IT, you know, in any kind of computer-related field, kind of learned it as it was developed over the years. They now have degrees in different IT fields, but that's not really a requirement for the most part. But for the exemption now, where it gets really picky is what that person's doing. So they're looking for positions where it's truly their systems analysts. They are truly programming something. They're this engineer. They're the creator of the software, not the ones just tweaking it afterwards or teaching others how to use it. They, you know, are the ones that create all the software that we have out there. And they have to be at a certain level. So that's where it gets into the other half of it. The salary is high. So in California, this position this year, it changes every single year. This position needs to be exempt over, $94,603.25 a year, hugely above most other things. And there are some companies where those people still get overtime pay. So even though they're technically exempt under this, they have worked out an agreement to where it's like, okay, they are good enough that the company says, all right, we will pay for the overtime because we want your brain working as much as we can get it. And so in normal computer related, federal law is the same as always. But California has these people isolated. So the ones that aren't going to be under this exemption in either direction are your help desk people. Sometimes even your IT manager, because they may be the only one in the company doing their IT, so they're very hands-on. They're the ones setting up the computers. They're the ones answering the helpline of sorts, or the complaints from employees. And they're not developing software. They're not doing this or that. So for an IT manager to be exempt, it's not going to be in this field. It's going to be more because of their managerial. So it's going to be something more like the administrative exemption. And take a look at that. So it does get questionable at times on how this is all put together. So as a reminder, when you misclassify someone as exempt, you've got things you have to look at. Sorry, hold on a second. Okay. And wet my throat a little here. So in California, you've got a required meal and rest breaks for the non-exempts. So you're going to pay for all of those times that the exempt person missed it, if now they get reclassified as non-exempt. Overtime. Everybody has overtime. It's just a question. California's got a little bit stricter overtime, which we really, really hate. But everybody else has the 40 hours in a week. But the same thing, if they come in on a weekend and work for you, and you didn't pay them because they were exempt. And some employees are very good at tracking this stuff. And, because while you might not be keeping records, they often are, particularly if they are having any questions about whether or not they really were properly classified. And if they're questioning it, that they maybe don't have enough authority or responsibility, then the chances are very good that they weren't an exempt role. Travel pay. If you've got some of these people who have to go out to meetings and stuff like that, and you're not paying for them, it's like that could be counted too. So it kind of depends on how you've got your travel set up. Maybe, I think most often what you see is somebody who has to attend a meeting like out of state or something on a Monday, and so they fly out on Sunday. Well, that's going to have to be paid time now if they have to be reclassified as non-exempt. And fines and penalties. The state and the feds will come after you for payroll taxes they did not receive. And it's not just the payroll taxes, it's income taxes that weren't paid to that the employee wasn't able to pay because they didn't get that extra pay too. So it's always fun when they come in and start looking around and, looking to see what qualifies. There's a lot of agencies out there who get a piece of payroll. And even workers' comp, if you've ever been in a workers' comp audit, if you have any checks that go to an individual's name, because they will look through your check ledger, and any checks that are to an individual, it's like, tell me about this. Especially if it's an employee, they're going to say that should have gone through payroll. It's so, because everybody wants their piece of the tax or the piece of the payroll amount that they get. And so it's important that you classify, because in the end, it's the company who takes the complete hit. The employee who is misclassified has nothing bad happen to them. In fact, they benefit, because now, like I said, that time I had to set 4 years of calendars in front of somebody, the very first thing a company has to do is pay that employee their missed wages. And that's just to get that pulled off that claim, because they're still dealing with all the other pieces. It's like, okay, if you think, and it's like, if you don't have something to back up or offer a different opinion, you're writing a check for that amount to that employee. And it could very well be that you're also going to be paying their payroll taxes for that amount. It depends on the state you're in, depends on your attorney, stuff like that. But you need to kind of really carefully, I think more than ever, look at your exempt level positions, knowing that the feds are working, they continue to work to build up that level of the exempt to, and if they can put that salary in there, it won't affect California people because, we're already paying like 49,000 and January 1st it goes up to 54,000. So we're already paying anything that the feds are going to come up with. But all the other states, and I've got clients with employees in a lot of other states, and I know that, they will take advantage of being able to offer a lower salary to someone in another state because they don't have to pay it in that state. But, you've also got to worry about all of our equal pay things that are going on out there. There's federal laws, there's state laws about equal pay. So that kind of takes away the option of paying lower in a state because their minimum wage is lower and therefore their minimum salary is lower. It really, from a pay basis, you've got to look at this carefully. But in the end, the biggest problem is inevitably those duties. I have seen a lot of companies, most companies, I would say, have people misclassified as exempt when they're a working manager and don't spend 51% of their time doing things that aren't, hands-on. And so that's, I think, the biggest one. It doesn't matter if they, and because that's also when you look at it, the number of people reporting to them also force them to spend more time planning, dealing with, the thinking side of it all, as opposed to just going in and hands-on helping out their crew. And, they need to be able to pass that test every week. It's not like, oh, okay, over a month, they spend that 1 week doing all these exempt level stuff. It's like, no, you want to look at it on a weekly basis. Could they pass that test? And I think the working managers are the one that and some of the administrative assistant positions are the two most classified levels that I run across. And, so you just need to kind of give that some thought. If you ever have to, look at one, well, it's kind of close to an exempt, I would say go with being conservative. Because again, that salary number could raise up to where now it's no longer doable. You need to train your managers, make sure they understand where their time should be spent, and make sure you've got job descriptions that make it look like they're exempt, that they've actually got, serious responsibilities, and then make sure they've also got the authority to match their responsibilities. Educate your senior management on the risks of misclassifying somebody. I've had this argument so many times, even when I worked inside. Oh, no, they make decisions. And it's like, no, they make decisions on a tree that you gave them that says, okay, if they're this, you do one of these two things. They're not having to come up with randomly deciding what would be, and using discretion on a decision. So keep that in mind. Take a look at that. And in the end, if it really comes down to, you're worried about some of them, attorneys have a little worksheet they can give you. And I've seen it from different attorneys. It looks the same for most of them. And it's it's breaking down. It's like having, someone over your shoulder. I've actually had that happen to me a long time ago. I was being, my manager was trying to move me up to a new position. And I actually had someone from HR come and stand over my shoulder for 2 weeks to judge what I was doing and whether or not it fit the level that they wanted to put me in. And so you need to mentally do that with these people. Take a look. If you followed them around, would you be happy with what you found them doing? Would they fit the exemptions? Because you really want to be able to back it up. One of the other things that was coming up legally, and it got rolled around for a while, but then nothing really came about it, was that they were going to require written justifications for every exempt position. That you had done the analysis, that you had, listed what they're doing, and that, something like that, but you had to be able to justify fully every single one. And, so give some thought to this. Look around at your positions. If you have any that you think might not be, this is where consider putting it under client attorney privilege while you continue looking at it, look and make decisions. The attorneys can help you, figure out what should be done here. And if nothing else, at least you're letting management then know where the risks are. and they make the decision. All right, we are at the end of our time here, I believe. Do we have any other questions? Whoops.
We actually have quite a few questions, and I know we're running out of time. So,
Well, and I can stay
one
on
quick,
for a few minutes, so if we see how many we can get through.
okay. So, somebody was asking if a barista would be considered exempt.
No. The law has already decided that one for Starbucks.
Okay, the next one is,
yeah, and I will say, even like in Starbucks, even the manager or the supervisor for that shift is not considered exempt.
okay. Another question is an HR and accounting specialist that has a bachelor's degree in accounting and makes more than minimum wage, are they exempt?
No, as like an accounting specialist is one of those titles that people come up to where they are giving it to somebody who's a little higher level than a clerk, but you're looking at, the first exempt level you're going to have in something accounting is going to be somebody who truly is an accounting manager. They've got several people under them. They're the ones probably doing the reports for senior management or the CFO, but they're not doing the day-to-day bookkeeping.
Okay. Somebody wants to know if, with regard to travel pay, does that count as work time when someone drives from their house to a site for a seminar?
It depends on how, if I know, at least in California, you can say that your trip from your home to your first place that you need to go for work is considered commute time and not paid. But if they had to go to the office first and then they go to the seminar or whatever, that time is paid time.
Another question is, can an exempt employee be paid for additional work outside their normal job duties?
There shouldn't be a reason for that. If you're, because even if you've got an employee exempt or non-exempt, I've had this happen where this person does our accounting by day, but they want to come and as an independent consultant do our cleaning, our janitorial work at night. Now that's different enough where it could meet, it could probably do something with that. But if they're just doing more accounting or something like that, more of the same type of work, then it's still going to be all under whatever role they're doing. If it's an exempt level person and you've got a special project, you could bonus the person for having put in some special extra hour work for the project. But otherwise, it's all just part of you.
Are you still there, CJ?
I am, yes.
Oh, okay, sorry. Sounded like it got cut off. One last question, does an exempt employee receive holiday pay?
It depends on your company policy. There's no law that says holiday pay is ever have to be paid. You can close 1 week a month and never have to pay people for that time. It's harder to get employees if you do it that way. But there's nothing special about being exempt that qualifies you for holiday pay as opposed to non-exempt. It's just a company policy on what you're doing for those holidays.
Okay. All right. Well, there's a couple more questions that didn't get answered, but I will go ahead and send an email to CJ and we'll get responses on you. So if we didn't get to you, we apologize. But I would like to thank you for attending today's webinar presented by Heffernan. We will send information by email with instructions on how to access a copy of the presentation on our website. Thank you, CJ Westrick, for your time and expertise today. We hope all the attendees found today's webinar to be a valuable use of your time. Be sure to join us on July 30th for Safety Leadership, Manager and Supervisor Responsibility and Accountability. Thank you and have a safe day.